Over the past few months, there's been a lot of uncertainty surrounding Canada's housing market. Now, the Canadian Real Estate Association has downgraded its 2026 forecast once again. But at the same time, we're starting to see some encouraging signs in the market. Let's break down what's happening. CREA is now forecasting that sales will decline 1.4% compared to 2026. That's a notable change because earlier this year, they were still expecting a slight increase in sales activity. What's changed is that activity was simply weaker than expected through the first half of this year. Earlier this year, higher oil prices pushed inflation concerns back into the spotlight, which caused bond yields to rise and lenders to raise their fixed mortgage rates. While those pressures have eased, it was enough to curb buyer activity during the spring market. On top of that, Canada's population growth has slowed faster than expected, and generally fewer new households means less demand for real estate, which is another factor of the lower sales volume. The good news is June showed some improvements. Sales are up about 0.5% from May and about 1% from last June. Not huge increases, but shows some stability and some momentum. Across Canada, the benchmark price for June was $658,000, still well above levels we see in the Bay of Quinte. Across Ontario, prices are below levels they were last year, but the rate at which they are declining is slowing. CREA now believes that markets in Ontario and BC could see modest price growth by the end of the year, while markets that have been leading the country, like the prairies in Quebec, are beginning to cool. This reinforces something I've been harping on: not all real estate markets move together. And while national headlines can be helpful for understanding broader market trends, they generally don't represent what's happening in our local market. If mortgage rates remain stable and buyers feel more confident that prices have finally found a floor, it could mean more confidence throughout the rest of 2026, not only in our market, but across Canada. That doesn't necessarily mean a rapid rebound. What it likely means is a slow, gradual return to a more balanced market where buyers and sellers both have greater confidence in making decisions. Thanks for watching this week's real estate update, and see you in the next one.